Tax season officially opened on the 7th of July, so many people have been asking me, Zola, how do I get a tax refund? Or how do I qualify for a refund from the receiver of revenue? In this video, I'm going to explain to you how it actually works. How do you actually get a tax refund? Watch this video till the end. You are watching the Financial Metaverse. So before I explain to you how the tax refund and the process actually works, let me just share this overarching principle around tax refunds, and that is you will only qualify for a refund if the receiver of revenue has deemed that you have paid more tax than what you were supposed to. So that is the principle. So you are refunded if at the end of the tax year you have been considered to have paid more tax than what you should have actually paid. But how does that actually happen? How is it that you get to pay more tax than what you actually should have paid? Let's look into this. So if you are an employee, it is very difficult to get a refund or a substantial one at that matter. This is because when you are an employee, of course, your employer pays your tax directly to the receiver of revenue before you receive your income. So your employer already works out, the income and of course the tax bracket that you fall into and what is due to the receiver of revenue in the form of tax. They already work out any tax rebates and credits that are due to you. If you are contributing towards a medical aid, you are contributing towards a pension or provident fund, and any other allowable deductions are already taken into account. And even in cases where you are contributing to a private retirement annuity, if you had declared that you are an employer, they would take that into consideration as well and then reduce your taxable income so that the correct tax is paid to the receiver of revenue. So ordinarily, at the end of the tax year, the tax that would have been paid over by your employer to the receiver of revenue ought to be the correct amount of tax that you should have paid. So when tax season opened, as it did on the 7th of July, most employees would have been auto-assessed by the receiver of revenue. This is a new process or system that they've implemented now to sort of fast-track the process of issuing refunds. They auto-assess most employees because they already have the information from your employer, from your IRP5, and then they determine automatically how much tax you ought to have paid, and if you've paid more, then they will automatically issue you with a refund, and it is unlikely to be a substantial amount. There are exceptions to this, of course, of which I'm going to explain very shortly, where you can claim certain expenses that can allow you to reduce your taxable income, which then will enable you to qualify for a bigger refund. Again, as an employee, there are very few allowable expenses that you can claim as a deduction against your income from the receiver of revenue. But if you are contributing towards a private retirement annuity and you haven't declared that to your employer, then when tax season opens, you can submit that information to the receiver. They will take your contributions to your retirement annuity into consideration, which will then reduce your taxable income, which will qualify you for a refund. Now, there is some confusion around how that works, how a retirement annuity allows you to claim as a deduction against your income. So here's the simple way for you to be able to understand this. So let's say you are contributing 1,000 Rand a month towards a retirement annuity, which equates to 12,000 Rand per annum. So that 12,000 Rand per annum is used to reduce your income. Okay, so say your gross salary for the year is 300,000 and you are contributing 12,000 per annum towards a retirement annuity. So the receiver will take your 300,000 minus 12,000, which will reduce your income to 288,000 per annum. So instead of paying tax on 300,000, you will be paying tax on 288,000. And the difference that you would have paid is what will be refunded to you. So you're not going to be refunded the 12,000 that you contributed towards the retirement annuity. but the effect it will have, it will reduce your taxable income so that you are taxed at a lower income. So the more you contribute towards a retirement annuity, the more it reduces your taxable income, which then allows you to claim a refund. It's one of the government's way in incentivizing people to save towards their retirement so that they don't become dependent on the state when they are no longer working. So that is one way as an employee that you can be able to get a tax refund. So if your salary from an employer is the only income that you earn, that is probably about the only way in which you can, reduce your taxable income so that you can claim a tax refund when tax season opens. Now, this is where things get a little bit more exciting, a little bit more complex. So is when you earn other types of income, even if it's from your employer, like a travel allowance or a car allowance, or you use a company car and so forth. So those types of income can enable you to claim deductions in the form of the expenses that you incurred. So if you travel a lot and you earn a travel allowance, you then have to prove to SARS that you actually spend more in terms of expenses than what they actually accounted for. And for that to happen, you need to keep an accurate logbook that keeps a record of the business kilometers that you would have traveled. And also, if you receive commission income, specifically when you receive more than 50% of your income in the form of commission, then there is a lot more expenses that you can claim as a deduction against your income, because you probably would have had to spend quite a bit of money in order to generate that income. You may have spent your own money to call on clients, to travel to meet those clients. Maybe you have a personal assistant that does your admin for you, and other related business expenses. So all of these things you are allowed to claim as a deduction against your income, whereby then the receiver will take those into consideration and then issue you a refund if they deem that they have overcharged you in terms of your tax. So for an example, if you generated, let's say, R1,000,000 over the past tax year, but you actually spent 350,000 in business-related expenses, such as a personal assistant, like I mentioned, a home office, and you bought office equipment, you traveled, business kilometers, and you kept an accurate logbook for those business travels. You spent money phoning clients, in terms of your phone bill, data, internet, and all those kind of expenses. So you can submit that evidence to the receiver, and then they will reduce your income from taxing you at R1,000,000, then they will tax you at R1,000,000 minus 350, which will be 650,000 Rand. So the difference there that you have paid in tax is what will be refunded to you. And that's simply how the tax refund process works. And of course, if you are self-employed, have a side hustle, or you actually run a business, then there is a lot more expenses that you can claim for, and tax does become a lot more complex. At that point, this is where now I believe you will need to consult with a licensed tax practitioner or seek the services of a licensed financial advisor. If you'd like a recommendation on that, you are more than happy to just leave a comment in the section below, and I'll be happy to share some recommendations if you are from South Africa. If you have found value in this video so far, please help me out by leaving a like or simply sharing it with someone whom you think will benefit from this video. More importantly, please subscribe and smash that notification bell. If you have a rental property, again, that is considered to be a type of business, you then can claim some expenses that are related to running that, that rental property. So you may obviously incur expenses in terms of the maintenance of the property, the rates and taxes on the property, and the interest that you pay if the home is financed via a mortgage bond, you can claim that as well. And there's other expenses that you can claim. But there again, if you need, expert advice, I would suggest you seek the services of a licensed accountant or a financial advisor. So again, the principle, I think, is very simple. If you have been deemed to pay more tax than what you should have paid, then you get a refund. And you obviously need to prove to SARS why you have paid more tax by submitting proof of those expenses, etc., which then SARS will consider and issue you with a refund. So in instances where you earn commission or you are earning more than 50% of your income in commission, you can apply to the receiver to treat you differently as a taxpayer in the form of a tax directive. A tax directive is simply a process where you ask the receiver to tax you at a flat rate because you generate most of your income as a commission earner, which is typically a variable. So, in order to manage your cash flow, you just would like them to tax you at a fixed rate. So let's say 1 month you would earn 100,000 Rand. The average tax rate that you would pay would be probably 35%. And the following month you earn 30,000, the average tax rate would be 19%. So rather than, 1 month being taxed at 35% and then another 19%, rather be taxed at 20%, all right? So you obviously have to provide proof in terms of the expenses that you think you are going to incur for that particular year. The receiver will take that into consideration and then issue you, the directive at the particular rate that you have requested. You will then take the letter that they would have granted you to your employer, who will then apply the directive and tax you at that particular percentage. Let's say for argument's sake, it's at 20%. So regardless of whether you've earned 200,000 for that month or you've earned 20,000, they will tax you at a fixed rate of 20%. Now there's a bit of a trade-off there, because at the end of the tax year, when the receiver reconciles the amount of tax that you paid versus what you should have paid, if you have been deemed to have paid less tax than what you actually should have paid, then you will actually be owing the receiver of revenue in the form of tax which you have to pay in. But it can happen, of course, that you may still owe, or the receiver may still owe you, rather, where you will then get a tax refund. Some people, don't like to use directives because they don't want to run the risk of owing the receiver. But some people prefer to use a directive because it assists with cash flow rather than the receiver keeping, that money until you claim for it during the tax season. So hopefully I've explained this in a way that makes sense and is simple enough for you to understand. If there are any questions, concerns, please don't hesitate to ask them in the comment section below. I'll be sure to respond within 24 hours or so. Again, if you found value in this content, please help me out by liking this video, share it with those whom you think will benefit. Most importantly, subscribe and hit that notification bell, and I will recommend you to watch these videos. No hope, you can still go. I never answer to no, man, I still go. Go, 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 yeah, go, go, go. Hustle hard, hustle every single day.